auction, a dog minus, a D minus. Did not go well. Let's go through the internals. 21 billion, 30-year bonds. The when issued market was trading 3.654 right before 1 o'clock Eastern. The yield, though, at this Dutch auction was 3.686. It tailed over 3 basis points. Higher yield, lower price. You don't want to sell into lower price structure. Pretty much every metric was weaker than 10 auction average. One that really stuck out, other than direct bidders, slightly higher, but one that stuck out, we always like to talk about the buffet table when you have an auction. That's the dealers. They get to take whatever the leftovers are. In this case, the leftovers were just shy of 16%. 10 auction average is 12%. That was the highest take by dealers since April of last year. In the end, this auction did not go well, and I think a lot of that has to do with the notion that many traders are starting to rethink how much time we're going to be spending with rates firming up a bit, and especially with that inverted yield curve, it does start to get a bit confusing.
Rick, what do you say to the Keith Fitzgeralds of the world and Mike Ferroli, who has research today saying this time is different, the yield curve is not necessarily signaling recession. He says it appears it's driven by the expected decline in inflation. Can we throw this out and no longer matters as a leading indicator?
Well, embedded in your question is the answer, okay? Inflation's going to drop. I agree with that. That is one of the driving forces. I also think that the notion of how this curve is inverted speaks volumes about the long-range forecasts of the Treasury market looking for major weakness. And I will just suffice it to say that you could look at the jobs data, and indeed it was strong, but I would prefer to consider trying to relate all the COVID experiences we have. And in my opinion, whether it was people retiring, coming back in the workforce, government programs that kept people out of the workforce, or notions of, child care, a variety of issues. But in my opinion, I still think we're going to see a recession. I think the yield curves are right. And I'm not a huge believer in yield curves, but in this instance, I think it's right. And I think that the relationship between what's left of the strong labor market and what the Federal Reserve thinks the labor market does to prices is incorrectly correlated.
All right, we got to go. Keith, quick last word.
Rick's a genius, love his work, but I am respectfully going to take the other side of that coin and stick with the jobs.
All right, we're going to have a brawl, a good old-fashioned bull bear debate on this another time. Gentlemen, thank you.